Hi everyone, welcome to our 12-part series, Inside the One Big Beautiful Bill Act. I'm Kenny Birch, a tax director in our mortgage banking tax practice. And throughout this series, we're breaking down the most important tax changes under OB3 and what they mean for you. These updates can have a real impact on planning, compliance, and your bottom line. So if you want to stay ahead and make informed decisions, you're in the right place. Now let's take a look at the business interest limitation under Section 163J and how OB3 changed the calculation with Sarah Seefeldt, an expert in our mortgage banking tax practice.
Hey Kenny, thanks for having me.
Of course. Sarah, to start, can you tell us a little bit about the business interest expense limitation?
Yeah, so the business interest expense limitation was introduced by the Tax Cuts and Jobs Act back in 2018, where it's limiting your business interest expense that you're deducting on your return. So high level, the limitation is really your business interest income plus 30% of your adjusted taxable income, which we like to shorthand and call ATI.
Perfect. You mentioned adjusted taxable income there. Can you tell us what makes up adjusted taxable income?
Yeah, of course. So prior to the One Big Beautiful Bill, adjusted taxable income was essentially EBIT, right? So your earnings before interest and taxes. And the One Big Beautiful Bill has been more generous and has permanently reinstated an EBITDA-like calculation, which is essentially now your earnings before interest, taxes, depreciation, depletion, and amortization. Now, when you're adding back your depreciation, depletion, and amortization, this increases your adjusted taxable income limit, thus increasing the amount of business interest expense that you can deduct on your return.
That's fantastic. And if a taxpayer does run into a limitation, how is the disallowed interest treated in future years?
Yeah, of course. So the great news is that it's not lost forever. If you do have a disallowance, it's then carried forward indefinitely to future years, and it becomes a timing difference on your tax returns. So if you don't get it this year, you will get the deduction in future years.
And then where is the business interest expense limitation reported on the tax return?
So assuming that you meet a certain reporting threshold, a taxpayer is required to report and calculate the business interest expense limitation on the Form 8990. So regardless if your interest expense deduction is limited, you are required to report it on this Form 8990. And the funny thing about this is, depending on the entity type of the taxpayer, this may be retained and carried forward at different levels within that 8990 calculation. So if you're an S Corp or a C Corp, this is retained at the entity level, and it's just carried forward there indefinitely until you can use it. However, if you're a partnership taxpayer, this is then passed out on a K-1 to the partners and tracked at, assuming you're an individual partner, tracked at your Form 1040 at the individual partner level. So again, it's required to be reported on the Form 8990. The calc between the different entity types remains the same. It's really just the difference between where is this carried forward and retained between the different entity types. And this isn't any different than how it was before the One Big Beautiful Bill. This is always how it was in the Tax Cuts and Jobs Act. The only change that's really new to you guys is the EBIT versus EBITDA ATI-like calculation that we're seeing.
Thanks, Sarah. Finally, can you tell us if this is a limitation that normally applies to most mortgage lenders?
So not necessarily. In general, most of our mortgage lenders are not limited on the amount of business interest expense they can deduct. Where you might see this difference is really if you are, say, borrowing against your MSR portfolio. In this case, you would be generating additional interest expense that you might not be able to offset with the interest income earned on the servicing portfolio.
Thanks, Sarah. I really appreciate you joining us and explaining the business interest limitation changes. Don't forget to watch the other videos in our series for other helpful updates.